Wait, can I, can I send this link to someone?
Of course. All right, so this is Coach Josh, and I just want to run through the velocity scanner. I'll be looking at the results for yesterday, Monday, the 3rd of March. It's really very interesting. Um, okay, so I should start off by saying that this strategy is very, very simple to execute. Like a 10-year-old, it's been simplified such that a 10-year-old can run with it. The However, there are going to be differences in your results and my results based on our discipline, based on our ability to stick with the strategy, and our ability to practice proper risk management. Proper risk management. But if you come in with the mindset, in the financial markets, one thing you want to make sure that you have is that you have a strategy that has a high win rate that gives you an edge in the market, right? Once you're sure that this strategy that I have, it wins more than it loses, then you can simply just decide that I will stay consistent. So one thing that you should also understand is losing is inevitable when it comes to forex trading. It is impossible to have a forex trader who never has losses. And if you are new to trading, that is going to mess with your psychology because we're taught not to lose things. If you lose money, if something happens and you lose your money, it's your mind is unsettled. If you lose your car keys, if you lose a document, you know, you are not comfortable. So it is it is against our nature. And in forex trading, you are going to have to learn how to overcome that side of you that doesn't want to lose, that doesn't want to see any red. Profits are normally in blue, losses are normally in red. And so there's a part of you that, so there's a tendency that if you start trading, once you just see tiny profits, $1, $2, you just close the trade because you dey fear, say, make you no enter red, let it not enter loss. If you do that, you are trading in fear. At the same time, you don't want to be greedy to just allow, to just, so market has given you $10 or $20 and you keep hoping it's going to give you more, it's going to give you more, it's going to give you more. One of the important things in Forex is learning how to take profit and walk away because there will always be another trade. There will always be another day. The Forex market is open Monday to Friday, every week without fail. Every week without fail. So I always say, markets know they finish, now money they finish. Let me say it in proper English in case somebody's watching this on YouTube. It is capital that gets exhausted. The market is always there. So if you're coming into the market with $100, $150, wisdom suggests that you look for a way to ensure that your $100 doesn't get exhausted so that you can take advantage of the next opportunity when it appears. And so what that looks like means that you're not going to expose your capital into one single trade. You won't expose your $100 in one trade because no strategy has 100% win rate. There's going to be losses. Losing is part of the game. As I'm going to show you. Okay, so already I've shown you the summary of yesterday's trades. There were 19 trades, 16 were wins, 3 were losses. Now, this 1,400 pips that I put here is assuming that, that should be 1,600. That, okay, no, it's 1,004, and I'll explain. This is assuming that for every win, all you took was 100 pips. All you took was 100 pips, which is $10, which is $10. So that means if you made $10 16 times, you made $160. Okay, so in this case is 1,400 pips 14 times. Okay, so let me just run through it. Now, what is the strategy? The strategy is whenever we find a blue diamond. Okay, so let me just first of all explain the everything on the screen, minus the letters, minus minus the 200 pips and the arrows. We have the candles, the red candles, green candles, red candles, green candles going up and down. We have these white dots. And sometimes you see that the white dots are underneath the candles. Sometimes you see that the white dots are on top of the candles, right? The white dots are on top of price. We also have the blue diamond. This is a blue triangle. This is another blue triangle. This is a blue diamond. This is a blue diamond. This is a blue triangle. You also have the red diamond, and red triangles. So essentially, all we're looking at on the screen are the blue diamonds or blue triangles and the white dots, and the red diamonds and red triangles and the white dots. Whenever you have the blue diamonds or blue triangles and the white dots underneath price on the same side, that's an indication to take a buy. When you have a blue triangle or a blue diamond and a white dot, that is your indication to take a buy. So now the white dots have to be on the same side. So if you look right here, we have a diamond, but the dots are on the other side. So that was not a signal to take a buy. That was not a trade to take. Now, had the diamond, so usually, typically the diamonds will appear first, and then soon after, the white dots will appear. Your best trades are when the dots come immediately after the diamond. Those are your best. You will get the biggest moves from such trades. Okay, so we want to analyze all the opportunities that we had yesterday. So the market opened, and soon after that, we had the dots printing along, and then we had this triangle. So that was your signal to take a buy. That was your signal to take a buy. When we look at, there are 300 pips here. This cannot be 300 pips. This buy happened at 5331, and price came all the way to 5331 to 5361. 361 minus 331. Okay, let's call it 300 pips. So you would have taken a buy here, and we see that price came all the way up like this. Now, according to my own strategy, what I am recommending is as soon as price goes 100 pips. Now, what is 100 pips? 100 pips is a $10 difference in the price. Let me see if I can mark. Let me make this line yellow. Okay, so that yellow line shows us that price is at 5330. That was the entry price, 5330. Maybe you entered a little bit higher. Maybe you entered at 5335 or something. Once you have an additional $10, once gold goes up additional $10. So if you entered at 5332, that means you'll go out at 5342, 5342. That would be somewhere here. So you would have entered at this point, you'd have exited at this point. If you're a beginner, that's what I just suggest you do. With time, as you get to understand how to, maneuver with the trades and all of that, you can decide you want to stay longer. You can also learn how you can move your stop loss, as price goes along. So this trade gave us 300 pips, but I'm saying all you need to do is take 100 pips. Take 100 and go home. I just want to show you the efficacy of the strategy so that you have confidence. When you are sure of what you are dealing with, you will have confidence to take the trades. So this one gave us 300 pips. The second trade, now look here, we had a diamond, but you are waiting for the first dot to appear. So we had a diamond and then the dot appeared. So that, according to our strategy, is a signal to enter. So this came at 5353. But it didn't give us up to 100 pips because this is 5346. That's 60 pips. Every $1 move in gold, we call it 10 pips. If gold moves up by $1, we say that's a 10 pip move. If it goes down by $1, we say that's a 10 pip move. So when we say 60 pips, that means gold went up or down by $6. $1 move in price is 10 pips. I hope that's clear. I hope that's clear. So,
Yes, sir. Yes, sir.
so following our strategy, since we're saying take $100, take $10 from 100 pips. This didn't give us up to 10 pips, 100 pips. So this one would have hit stop loss. So you would have lost that trade. Okay. And remember, I said losing is part of the game. So you're waiting for the next signal. We had the third trade. We had a diamond. And what did we have? We had the white dots. At the appearance of the white dots, that was your signal to take the trade. Had you taken that trade, it would have given you 300 pips, which would have been $30 if you're using the lot size, the smallest risk, right? It would have given you $30, but I say walk away when it gives you $10. All right, now this is the fourth trade. We had a red diamond, and we had the dots on the same side. So had you taken this trade, it stopped just shy of our target, just shy of our target. So depending on how you trade, sometimes I will close just before it gets to my target. I do that sometimes, right? So you may have taken this trade and gotten out successfully with $9. The next trade, which is here, we have a blue triangle and we have the dots. This, it went up, it went sideways for some time until it gave 80 pips. So this will have given $8. Okay. Again, we are waiting for the next signal. Now, this is also important. If you are in a buy, and an opposing signal appears and price has not yet gotten to your target, close the trade. So if you are taking a buy here and price is playing around, and then you see that this red triangle and the white dots on the same side, that's your signal to close your trade. I hope you get that. Okay, so once you close your buy, you would have entered the sell. Now look at how far this sell went. Notice that when the sell was happening, a blue diamond opened up, but there was no white dot. So you don't respect that. So if you want to continue holding, you can keep on holding. Had you held it the entire way, you would have made $59. But on the conservative side, I'm only counting I'm only counting $10 out of this $59. That's why, that's what I accounted for here. I wrote 1,400 pips because I only counted 100 pips from each of the trades. I'm looking at all the trades that happened yesterday. So this was the seventh trade. You see that we had a white dot. So price had really sold. Price had really sold. Now, I've talked about your profit target, which should be 100 pips. Your stop loss. So let me just write. So our TP, if you are being conservative, is 100 pips. And our SL is 200 pips. Now, remember that for gold, every $1 change in price is 10 pips. So 200 pips is a change of $20 from your entry. $100 pips is a change of $10 from entry. I hope it's clear so far.
Sure. Yes, very clear.
So an example would be entry. If the entry is 5,000, what would TP be? What would TP be? What would 100 pip TP look like? That means you're not getting it though.
500.
If our entry is 5,000, right? What will our TP be? If you want to take 100 pips,
The
let's say
take profit should be 500 pips.
no. If our entry price is 5,000,
That's
that means
5,100.
not 5,100.
You said every $1 move in price or 5,001.
5,000. Every $1 move
$1. Yes.
is 10
This
pips.
piece. Yeah, that's what you said.
Every $1 move is 10 pips. So 100 pips is a $10 move.
Yes.
So
Okay.
if we bought at, so let's say we did a buy.
Okay, 5,010. 5,010.
Exactly. So that would be 5,000 plus 10,
10. Yes.
which will be 5,010.
Yeah.
Okay. Our SL will be what? Will be 5,000
Maybe we use 50. Okay. We can use
minus
50 piece.
20.
Okay, 20.
That would be
Wow.
4,980.
80. Yeah.
So if the price was at 5,000 when you bought, you will set your take profit to be when price gets to 5,010, your stop loss will be 4,980. That's it.
But the stop loss is much. That's 200 pips. That's
Yes.
200 pips. That's you're willing to lose. But if it goes against you, you're willing to lose higher than you want to take profit.
Again, if you look at most of the trades, you would actually see that this one did 300. So, I'm using this for beginners to say, now which one sure pass? Okay, this one did 300 pips. This one did 300. This did 90. This did 80. This did 590. This did 300. This did 120. This did 830. This one did minus 200. This did 1,700. This one did 670. This one did 220. This one did 1,500. This one did 930. This one did 270. This one did minus 200. This one hit stop loss. So 3 stop losses yesterday, and then this did 300. This did 270. So the truth is that more trades will do 200 pips. So we can actually do 1-to-1 to say reach 200 pips, which is $20 to make $20. You can actually do that. But I'm saying that for a beginner, don't stay long in the market. Just take 100 pips, which is a $10 move, and close. Now, even though we're risking more, it's like a negative risk to reward. I get what you're saying. But the win rate in this case makes up for it. The
Oh,
win rate
understood.
makes up for it. As evidence from the summary that I put here, 19 trades in total, 16 wins. Out of these 16, okay, let me change it to 14 wins. 14 wins. So $100 14 times give us 1,400 pips. So 14 wins gave us 1,400 pips. 3 losses was only 600. So because of the high win rate, it makes up. So if you took all the trades, even though it's not likely that you're going to take all the trades, and it's also not likely that you're going to take all the losses. It depends on your schedule, it depends on availability and all that. But just imagine if we were to actually count all the profits. This 300 plus 300 is 600. Let's ignore this 90 and 80. If we ignore the 90 and 80, like look at how much profits just this strategy gave yesterday. Plus 590 plus 300 plus 120 plus 830 plus 1,700 Can you see that it's crazy? Plus 670
Yeah, very
plus
crazy.
plus 220 plus 1,005 plus 930 plus 270 plus 300 plus 270. This is 8,300 pips. One, assuming one cut the entire move. That's 8,300 pips. So as one begins to get more to gain more mastery, you would learn how to, so for example, you open two trades, you set one to the first take profit of 100 pips. So that one will automatically close by itself. You secure that profit. Then you move your stop loss from your minus 20, from your 200 pips, you move it to break even.
Break even, yeah.
Wow. So that no matter what happens, you've already secured the first profit, and then you now allow the other one to keep running. So as it goes in profit, you just keep shifting your stop loss. That's how you get to eat bigger moves that the scanner gives. But I'm sure Pastor Yola, I'm sure that sounds a little complicated to you now, but with time, you're going to understand what I just said. This aspect I just said of trade management. Get it? So for now, it's just the strategy itself. So I believe the strategy itself is simple enough, is it not? Diamond, blue diamond, white
Very
dot.
simple. Yeah.
Blue diamond, white dot, take your buy. Now, something I do sometimes is that, so if I open my screen and I find a blue diamond and a white dot, sometimes maybe it's a little bit high and I see that the price starts coming down. In fact, I took this particular trade yesterday. As it starts coming down like this, I would take another entry. I'll add a second position. By the time that my second position gets to the entry of my first position, my first position is at break even. The second one is already in profit. I can decide to close the first one, or I can even close everything and walk away. What I just want you to have confidence in is that this strategy works more than it doesn't. Yes, it had a few stop losses. There are going to be a few stop losses, but the goal is consistency. If you stay consistent with it, there is no way that at the end of the day or at the end of the week, your account is not going to be in massive profit. It could be that today was a busy day and maybe the only 2 trades you took hit stop loss. As long as you are protecting your downside, which is 200 pips, don't let it go more than 200 pips. Protect your downside 200 pips so that your capital doesn't get exhausted, so that you have ammunition to come and fight another day. So you come the following day, you take your trades again. I mean, so if you lose one trade, which is $200, 200 pips, all you need is two trades to get it back. So whenever I make a loss, I'm good. I don't mind because I know that this strategy gives so many wins. I know that it gives so many wins. I just stay chill. Refuse to revenge trade. You know what they call revenge trading, where you are now trying to be desperate to make the money back, and then maybe you opened your system and the thing was already like here. Taking a trade here is not the strategy. If you buy here, you are not following the strategy. Now, you may get away with it. You may get away with it and make some profit, or you may be lucky that, okay, you took a buy here, and then soon after you took a buy, a blue triangle opened up. And then, okay, oh, thank God. But here's the thing. The Forex market is like a wild animal. It will allow you get away with indiscipline until it will strike you so hard that there will be no recovery. That's how, so like you must engage this thing as if you are engaging a beast, a monster. You must always be armed. Never let your guard down. And the way you keep your guard up is like you're boxing. And in boxing, they say always have your hands up. Always have your hands up. Don't lose guard, right? In boxing, the moment
Yes.
you begin to lose guard, your opponent just needs a good opportunity to give you a nice strike, left hook or uppercut, and is a KO. So in trading, the way you keep your guard up is with your stop loss. So look at how profitable yesterday was. Look how profitable
Yes.
yesterday was. But do you know that somebody lost his account this same yesterday?
Sure. Very true.
And the reason he lost the account was because he entered a buy. I think it was this one. He entered a buy somewhere. Yeah. So this one that did stop loss, and the market dropped and he didn't put any stop. I think he said he stood up to go and do something. And he was in a buy and he
Oh,
didn't put a stop loss. By the time he came back, you know, his $100
oh, somebody you know.
somebody in our team, his $100
Oh,
had gone down to I think $14, or I think he lost the whole account, something.
oh, that's sad.
Yeah.
That's sad.
The
That's
only
sad.
good thing for him is that he had made profits the previous days, which he had withdrawn. So, it's more like he's at break, almost like at break even. He started with $100, made $71, withdrew the 71 that yesterday morning.
Wow.
Withdrew the 71 profits. And so the $100, he was in a trade, and that $100 came down to $14
Mm.
from a massive market sell-off. That's why you must always protect the account against these massive sell-offs. So now, how to execute these trades for those who are new with how to use MetaTrader 5. I say open a demo account. I believe you've already done that. There's a video on how to take the trade, how to open the trades, how to close the trades. Practice that for a day or two. Be sure that you have started making profits using the demo account. Once you have a hang of it on the demo account, then you start taking the trades on your real account. So at this point, you might believe that it's simple enough. It's like there isn't much explanation. Now, if we want to make it a bit more complex, we will say check. So remember that all trades are taken on the 5 minute time frame. So whenever you open this chart on your phone, it will by default be on the 1 hour time frame. But we don't trade on the 1 hour time frame. We trade on the 5 minute time frame.
Yeah.
Now, I
Wow.
haven't gone into the complexities of saying, first of all, check the trend on the 1 hour time frame. With time, we will start to have those conversations. To say before you take a
Oh,
trade, first of all, check what the 1 hour is saying. You know, so if the 1 hour, so as much as possible,
yes.
you want to have the 1 hour and 15 minutes saying the same thing. So if you have the dots on the 1 hour going up like this, which is buy, or maybe you have the diamond and dots, and then on the 15 minutes, you also have the dots under going up saying buy. Then you come to your 5 minutes to take. So if you want to be more conservative, you can decide that you will only buy when the 1 hour and 15 minutes are also saying buy. If you want to be more conservative, you want to be more professional, you can decide to do that. to say that they will only buy whenever the 1 hour and the 5 minutes and the 15 minutes are saying buy. Okay.
Okay.
All right.
Yeah, sure.
All right.
Sure.
But you know, but this thing is like there's no need to overcomplicate it. It's simple enough. It's simple enough. As much as possible, we try to provide guidance in the group. Like yesterday, when there was a very huge market sell-off. So I believe I called the buy in our Telegram group. I called the buys from here. I called the bottom. I called the exact bottom yesterday, and I called it. So I took my trades from very bottom here yesterday. Made some massive profit. So if you are taking those trades yesterday, you would have also, made some killer profit. All right. So is there any question that you want to ask?
No, me rather it's commend. I'm commending Akash shares. It's just that personally, I don't know if it's fear or like I told you, because of personal experience. I don't have to start. But this stuff is so beautiful. It's so beautiful. I'm so happy. So I'll just like yesterday, I also noticed that beyond this velocity.
Just a second. All right. So there are some resources that I have made available. So we have our private Telegram group. There is this other Telegram that I had created a while ago. And if you come to this Telegram, Win with Josh, you will find that there are some trainings I've done here. How to identify your support and resistance areas, how to use the Fibonacci tool. Fibonacci is a little advanced. It's important that this strategy is so simple. Break of trend strategy is really very simple. I did a training on this. It's on my YouTube channel. This lady also, I shared her video. It's also on the same topic. Very, very powerful. So by the time you start having those things in confluence with the scanner,
Mm,
you would even begin to increase your win rate. Okay.
yeah.
These are all the different. So once you are subscribed now, once you have an active subscription, you have access to the channels with all the educators, right? The people who are worth following. Joel Arias, if you check now, you will see all the profits that people have made today from his trades. So you have access to Joel, FX Edge, Preston Gomez. This Preston guy is actually very good. He trades only once a day. He trades only once a day. So, like if you are the very busy type, just target when he's taking his live session. Just target when he's
Wow.
taking his live session. Join his session, take his trades, and go about your business. The guy is very good. He's very,
Wow.
very good. Look at the profits that people have made today. But there's somebody in
Wow.
a trade for $26. This person this week has done 2,600. This person
Wow.
did 88 today. It's 214 today, 3rd of March, 303 today, 1001 today, 511,
Wow.
25, 29 this week. The guy is very, very good.